We heard in the news, South African wholesale retailer Massmart posted a 19.9% drop in first half profit, with headline earnings per share falling to 347 cents in the 6 months to the end of December. But that pretty much in line with its forecast range, predicting a 16 to 24% fall. With me now to unpack the detail is the company's CEO, Grant Pattison. Thanks so much, Grant, for joining us this afternoon.
It's a pleasure.
Well, certainly it's not just Nedbank in this position where it's feeling the pressure of a consumer that is certainly come under pressure. It's clearly had an impact on spending patterns at your stores as well. The last time you were here, we were talking about this push, from more towards cash spending from credit spending. Are we seeing more shifts in these spending patterns?
I think the spending patterns have probably stabilized. The last 6 months has certainly been the most difficult 6 months in Massmart's history. But we're starting to see positive signs. So actually, we're starting to see shifts move the other way now, where people are getting back into spending on credit cards.
Okay, well, let's take a look. That one pressure point is possibly a consumer, a distressed consumer. Are there other pressure points that we need to keep in mind here?
Well, for us, certainly our African business has been a pressure point. The African business has performed all right, but there's no question the African countries, other than South Africa, have felt the effects of the global economic crisis. But the biggest effect has been the translation effect. The rand was weak a year ago for the same period, and now it's very strong. And the translation effect has probably affected the contribution of Africa to our earnings by 20 to 30%.
Yep, so that's a huge hit to the business at this stage. Having said all of that, then what is your, your outlook for further penetration onto the continent? Well,
the interesting thing is the returns and business model of our African business is still superior to our South African. We get higher returns, higher margins in Africa. So certainly we're not changing our plans at all, and we'll be pushing as hard as we can into Africa.
Let's take a look then at South Africa and what your plans are here. I mean, we're looking at a company where we know that your low cost model has been a pretty attractive one in the past. What kind of strategy are you going to be needing to employ moving forward in order to weather what's left of the storm?
Well, we've got a good portfolio. We've got fantastic assets, we've got fantastic people, and we've got fantastic brands. So what we will be doing is shifting mode slightly. The last 12 months have been about protecting the income statement, the balance sheet. Sales growths have declined for the last 12 months, but we're starting to see a turn. So we're going to be moving back into things like format renewal, retail innovation, more promotions, aggressiveness in trading, opening up stores and acquiring other businesses as well. So we're very much in an expansive mode now.
Let's talk about management and the role that they have to play here, because you've got to be focused on margin costs and stock control. I mean, just how tricky has cost control and inventory management become in this current environment?
Well, it's one of the things I'm most pleased about. We've invested a lot of money in supply chain, and one of the most difficult things to do as a retailer is, as your sales come under pressure, is to keep your stock aligned. And effectively, we've had zero increase in stock over the past 6 months, which is a testament to that investment and that discipline. On expenses, we've managed to grow comparable expenses by only 2.5%. This has been incredibly hard work. It's meant rescheduling labor, it's means doing some things that we stopped doing some things, but we've managed to maintain our capital investment. So we're still investing for the medium and long term, but it's been a really tight and difficult 12 months.
Of course, the 12-month period has been tough, and it's an experience felt all around, no matter what sector you're operating in. Having said that, though, when do you start seeing the impact of lower interest rates starting to filter through and impacting your bottom line? And do you see it impacting positively or negatively, as those very same cost-conscious customers could then have a lot of extra cash to divert in different directions?
Well, we definitely started to see it in December. Our low point was November. December was still not a brilliant month, given it was the festive season, but it was better than November. And since then, January's been better than December, and February's been better than January. So those consumers who've survived the recession certainly have more money in their pockets and are spending it. Unfortunately, those people who became unemployed are probably still struggling a lot, and we look forward to the more job growth so that we can bring those people back into the economy and start spending.
Well, you've declared an interim dividend at 252 cents. Still, you're clearly optimistic about the road ahead. I mean, what's your forecast for the earnings in the second half?
Well, just to comment on the dividend, our cash performance was magnificent at growing cash generated from operations at 2.4%, a massive release in working capital. But looking forward, what we're saying is the second 6 months are certainly going to be better than the first in terms of growth on the prior period, and we've gone as far as to speculate that perhaps even we could grow earnings or at least hold them for the year. But those are difficult targets to meet.
Well, while we're looking at the road ahead, I mean, I'm sure you've heard rumours about that Walmart is entering into the South African playing field, and it's possibly going to be on an acquisitive path. And we've had Shoprite and then Massmart being pinned down as possible targets. Pure speculation at this stage. I mean, is that something that we should be anticipating moving forward? Well,
you know, there's been a few comments speculating about that, and I don't think it's useful to add to that. But, you know, South Africa and Africa has no global players in it. At some point in the future, one of them is about to arrive. I'm sure Walmart must be one of those who are looking around Africa.